much for being here. Let me just start with the financial space, because the last time you were with us, you said, this year looks a bit tough for the PSU pack. You saw limited room for upside. But what about the private banking names? And I'm asking because of this whole bunch of deals in the news, whether that is Federal Bank with Jana Small Finance Bank and now DCB potentially looking at a large fundraise. Do you see more activity here, some sort of a opportunity for upside in some of these mid-tier, private sector names?
Yes, absolutely. So we've been saying consistently for some time that small and mid-cap private sector banks is where the action will be. And that is one of the preferred segments within the financial space. We think that segment offers what we call growth beta, that in a credit upsurge, they will outperform the system credit by a significant margin just because of low bases and a little more risk-taking capabilities. So we maintain that these deals, if they do happen, are reinforce that argument, because then not only do they get growth capital, but it also addresses capital anxiety for the future, so they can grow with more confidence, knowing that there's an anchor investor, and if they need to come back to the markets, then they will be able to do that with with an anchor investor already established. So you're absolutely right. The small and mid-cap banking space does look interesting from here on, and that is one of our more preferred sectors, and we prefer that pack to the large-cap banks.
Right. We take that point. And the other thing that really stands out this time around is the earnings have been fairly resilient, Seshadri, if you look at the first quarter earnings season. But the market moves haven't been so. We haven't seen a big reward coming to some outperformance. Instead, there was a dent coming into any sort of rare misses that happened in the market. So what do you make of that? And in light of that, the next couple of quarters, what do you think stands to benefit more from an earnings-led recovery?
There are two reasons, I think, why the market hasn't responded as strongly as it should have to the strong first quarter earnings season. First is global factors. You've seen two significant headwinds. Oil prices have been elevated. That's the first. They're now starting to correct. If we get crude back below $80, and it's difficult to predict, but if it does come back and there is some peace in the Middle East, then I think that would be a good catalyst for Indian stocks. The other is, of course, long bond deals in the US pushing up over 5. That obviously raises the asking rate or the expected return for Indian stocks, and with valuation slightly stretched, that becomes a second challenge in terms of the market. So those are the two external factors. We also would point out that if you look at the dispersion of valuations, the number of companies that are trading above long-term averages, that percentage is quite high. Even though the headline Nifty valuation may look a little attractive, the dispersion of valuation is not that attractive, which is why the market is in stock picking mode. They're chasing stocks which are which are definitely showing strong growth momentum, and a little cooler to where the valuations are high, but growth is not keeping pace.
Right, take that point. Just a final question before we let you go. The global sentiment is still fairly volatile, though oil prices are off highs right now. Do you have a call on oil marketing companies and energy stocks?
Yeah, if oil prices do come, you may see a short-term rally in the oil marketing companies. Their long-term price-to-book valuation is not that is not that stretched, so you could see a short-term rally. Whether they provide you the long-term compounding story in terms of stock price is a different question, and the answer there is largely no. These are not long-term holdings. You want to hold them for these short-term opportunities, and then try to exit them. The other is that product spreads are also very high. So some of the larger players may benefit from that. Because there is a little bit of tightness in global refining capacity. But these are short-term factors. Long-term, as I said, you wouldn't want to hold these energy companies. You just play the trends of if oil does fall below $80.
Right. Take that point. A lot more questions, but out of time. Thank you so much for joining in and giving us your view on the markets and a whole host of themes that we should be tracking over the next few quarters. We'll obviously get back for a longer conversation later as well. Take a short break, come back, get you an insight on India's credit spending.